What's up, Stock Twits crew? Good morning and happy FAFO Friday. Hope y'all are having a great week so far and a great morning. Gosh, this market is crazy, getting that continued downside. Maybe holding up and bouncing a little bit right now. I'm actually, Michael, I don't know about you, but after the downside all week, I might be a little more bullish today, but we'll see if we get the setups for that or not. But how are we feeling? It's been a crazy week. We've had a crazy downside market. Have you been capitalizing?
Oh, absolutely. This is again what was mentioned in the green room there. I love these markets as a relative strength trader, as a guy who just buys the strongest stuff and owns the strongest stuff. It becomes the easiest thing in the world to find the strongest stuff when you have sell off. So I'm making my list and I'm just waiting. Give me one, a couple 30-minute candles. The market's holding. I've got like a list of 5, 10 names I want to buy.
Yeah, 100%. We were talking about it backstage on how, we love the market ripping and going up all the time, but it makes it a lot easier to pick out those names that are doing good when the whole market's kind of drifting to the downside and you see these sectors that are just doing so well. It makes it a lot easier to pick and choose which one's the long, right? So
Yeah.
excited to get into all that. Max, I don't know if you wanted to pull some of that stuff up on the back end that you had with the heat map and everything. Oh yeah. Oh, we were talking about this backstage. I want to point this out, Michael. You're gonna love this because we were wondering, every last time Forbes is published a big guy on the front of their page. What's that? Oh, X isn't working. Okay, we're just gonna restart the stream. No worries. No
All right.
worries.
Cool.
No worries. Yeah, no worries. I didn't even realize it's not working on X. Hopefully we're live everywhere. I think we're good now. So I want to bring back up that the Forbes magazine because that was just hilarious to me. We were talking about it backstage, and I remember when that first came up, we were wondering if that was potentially going to be a little bit of a top on Bitcoin. And given that Bitcoin just dropped below 80,000 last night, I would say that that was pretty accurate. I don't know, Michael. Is this a valid indicator to be using now or what?
They teach this in the CMT, right? So when I took my CMT and I got to this chapter, I just started laughing because it's something that people have been using forever as just an idea to say, hey, let's, generally speaking, these things are wrong. But yeah, it's one of those where it's scary how not just for Forbes, not just for Bitcoin, you can see this in the market, you can see this in currencies, you can see it everywhere. And the idea is that by the time the event happens and by the time we get to the point where it gets to the editors and they write the article and they take the picture for the headline and they do it, the move's probably over. So it's the whole shoe shine boy indicator just in modern day. But yeah, I think this is hilarious. I think I shared this on Twitter and got a bunch of people yelling at me a couple weeks ago. So I should find it for some I told you so's.
100%. It's kind of similar to like when you start, like Nvidia. When I was, heavily invested in Nvidia, and then I start hearing all my friends like, "Oh, should I buy Nvidia?" That's kind of like the similar thing. I'm like, maybe the top's in.
Yeah.
Maybe we're done for. Here's the record weekly outflow from crypto, getting nasty here into the 25th. So, record outflows in crypto there, not very good. Honestly, though, God, I look at the chart, man, and I get people freaking out when you're buying highs and buying 100K, but I think all of this dip and this whole pullback to the downside is something we've seen plenty of times before, and it looks plenty constructive within the impulsive moves we've had up previously. I don't know. What are your thoughts, Michael? Like, is this looking really nasty to you? Like Bitcoin's, really coming in, or is this kind of a buying opportunity for you?
So we got to talk time frames, right? So long
Yeah.
term, if you're bullish on Bitcoin, then you kind of have to buy it when it's crashing, right? Now, I'm old enough to remember the bear markets that weren't, weeks, but they were months and they were years. So the way I look at it personally is instead of buying the thing that's broken on the way down, I'm going to wait for it to start going back up again, right? But so it just tells me that hey, it's one of those where again, if you're just dollar cost averaging, then this should be the time where you're probably adding a little bit more, doing things like that. But yeah, for me, this is one of those where I'm not buying things on the way down. I'm going to wait for them to kind of settle in and then start to push up again. And it could happen way faster now that we have more institutional involvement. We have people like rotating in from other sectors, but it doesn't seem to be a time to be shorting. Let's put it that way.
Yeah.
I wouldn't be chasing this to the downside.
No, I'm with you. I had a big level at 83,300 that we tried to hold over the past like 2 days. We're breaking back under it today. I'm interested to see if we want to reach that like 73 and a half, just those previous all-time highs. I think would be a great retest. And if we want to go lower, I mean, we can do that. I'd be fine with it. Next spot for me would be the range lows of that previous all-time high kind of range there. But it seems a little overdone for them to take it to like 48K now to me,
Yeah.
but you never know, right? I'm always open-minded to know that like the market can do whatever it wants, whether it's Bitcoin or normal stock market, right? I mean, these assets can do whatever they want. So,
Well, in
gotta keep
oil,
that in
every
mind.
time, right? I just think about anything can happen. I just remember that oil went to zero. So if oil can go to zero, pretty much anything can happen at any time.
Absolutely, yeah. Here's the heat map from yesterday too, just Christmas tree as you like to call it, Michael Nauss. I know we'll probably share your heat map as well and get some of the names that you're looking at, but just again, very easy to pick out which names are doing well, which sectors are doing well, and capitalizing on those. Which ones have you kind of been touching on over the past week?
A lot of financials and a lot of healthcare, right? You can see
Hmm.
those sectors are highlighting very well. And, I don't think we get a rampant bear market when financials are hanging out near all-time highs. I just think it's one of those where we're getting a rebalance. We're getting a pullback in tech and buying in other things. And it's unfortunate for people who didn't have an exit plan for their large cap tech and they're still holding these names. Sorry, but as someone who wants to rotate where the big money is, it makes it very obvious that people are still bullish financials or still bullish healthcare. You just got to find the names inside those niches that are doing well.
Yeah, 100%. Also, just wanted to point out on the StockTwits platform, Keith, maybe if you can go to that search bar, I wanted to just point out that you guys can see all the most like trending tickers and stocks and everything coming up on the Stock Twitch page. So if you guys are like looking for what's trending today, what's down the most, what's up the most, you guys can see that right on Stock Twitch. Just go to that search bar. You can scroll around and see all that stuff. See some posts from the Stock Twits channel, and they usually throw some other channels up there. It's not always just from StockTwits, so just keep that in mind if you guys are looking for extra info. That's there for you as well. So just wanted to throw that out there. Again, I wanted to mention I know it's with the downside market, it might be surprising, but I'm actually feeling pretty bullish today. Just given that we got the downside from Friday all week, pretty much in one direction, and we took some big bearish targets on NQ that I would look for some buying now, at least back to some 50% retracements, maybe of yesterday's range, maybe even of the entire week's range. I don't know how you're feeling, Michael. I know it's been a crazy downside market, but just for the day traders, I guess I'm kind of leaning towards the bull side today if we get the confluences needed. But we could open up and just keep selling if we want to.
Yeah, and we're getting to close to the lower end of the overall range, and it's important to know that the SPY, although it feels very bearish, has just been range bound. It's just been hanging out inside of a range. So, it makes absolutely perfect sense that if we're going to be range bound, when we get near the low end of the range, we bounce. When we got to the top end of the range, we sold off. And this is what is expected after 220% plus years in a row. We had met two massive years. You want the market to do this kind of sideways consolidation that it's doing. And it makes sense just based off the fact that we've seen a Trump administration before, and that was a choppy market where there was, tweets coming out every day that would either rip the market 5% or tank it 5%. So all of this is pretty expected. So I'm just kind of waiting to see when the market chills out a little bit. Then that's when I'll start looking to buy those names that I was talking about.
Yeah, 100%. Here's it's funny, the bearish sentiment blasts higher despite the small pullback. So just on the SPY, I've made plenty of posts about this on SPY too. Just looking at like the weekly and monthly chart and where we're actually at. And then you scroll your timeline on Twitter and you see all of this fear. And I just, I laugh. I don't understand it. It's crazy. And now I totally understand if you're in names like something like Palantir that's pulled back pretty heavily, and some of these individual names that are taking a hit. But if you're a long-term investor in the general markets and S&P and QQQ, I mean, none of this pullback is real fear. The monthly candle just barely flipped red like 2 days ago. And so that's where, I mean, I think people got to really bump up their time frame and maybe just take a little bit of a chill pill. Especially, I understand if you're investing at highs. There's probably a lot of people that came into this year that have been on the sidelines and invested at highs and are not loving it right now, right? But at the end of the day, I mean, this is just not real fear for me, and that's why I'm personally not buying up this dip in my long term, right? Because I definitely think if we're really going to sell, we could go way, way, way lower than this. But
Yeah,
obviously, people can take
no,
advantage of this. I'm curious on your thoughts, though,
I
Michael.
I'm with you. I'm massively shocked about the bearish sentiment there in the AII, because these are supposed to be professionals, and then also just the on the streets looking at what Twitter and everything. Everyone is sky is falling. We need to run around and be really really scared. And the market's down like 4% from all time highs. We had all time highs a couple days ago. I think some of it might be the speed at which we pulled back 4%. That gets people a little bit worried. But yeah, if you just zoom out, we're in a range. So I'm excited for this week, the AAII, which I think comes out on Sunday nights or Monday or something like that. It's probably going to be like 100% bearish, and that's when you're really going to want to step on the gas, put some money to work.
Yeah, 100%. Yeah, I mean, I get it. We did fall fast, and it can be scary. I guess when, like you say, when we're just trading in a range like this, I can't be certain of anything. You know what I mean? And
Hmm.
it's like, okay, yeah, we got some downside. Markets look scary, but again, what has the SPY done since the dawn of time? You know what I mean? And until I really have a reason to be like, okay, this market's really going to come in, which I don't yet. And I did for the short term from last week. Friday, I was like, oh boy, we are getting the setup for the sell into next week, and we sold all this week. It was great. But now, we've hit a lot of those targets, and I'm
Yeah.
getting a lot more bullish than bearish yeah, at this area now. If the higher time frame tells me different, right, and the monthly really gets nasty, and we want to continue to sell, then I'm wrong, right, and I shouldn't be getting so bullish. But I have to just follow kind of what the market's telling me, right, and the market's telling me we're trying to hold up here and maybe get a
Well,
bounce
and
back into the range.
part of the issue is that people have been conditioned over the last couple of years, and this is the same rant. If you go back to when I was ranting online in 2020, people got conditioned for momentum trading. They got conditioned for, I'm going to buy Nvidia when it breaks new all-time highs, and then I'm going to come back in a month and I've doubled my money. Look at me, I'm awesome. Same with crazy names like Celsius and all these different things. They just kept ripping and ripping and ripping. And then you get to these markets. And this is where I think traders have two options. One, you learn mean reversion, right? You learn to buy support, sell resistance. You learn to buy pullbacks. You adapt your trading style. Or you sit in cash and you just walk away and then wait. Eventually, the market will break new highs again, and it will hold that break for a period of time. And then this whole thing of it will probably be a different sector. It's always a different sector that gets us to the new highs again. That will become interesting again. Until then, just again, either you got to be light on your feet, you got to buy dips, you got to sell rips, you got to do all that kind of stuff, or you just sit out, go golfing. Right? It's starting to warm up out there a little bit.
It is. It's actually just where I am in California. It was like overnight. One night we were freezing, and then overnight I'm sweating in my room every morning now. It's been toasty.
Mhm.
Except it's been a little cooler this morning. I had my window open all night, so I'm all furred up now.
Yeah,
Yeah,
I'm in
let's get
Canada.
that
I've got no there's no sympathy for
Yeah,
that.
yeah, I know. I know you don't.
None.
Here's economic data for today. We had PCE come out this morning, but honestly, nothing to really worry about. It came in perfectly in line with the
Hmm.
forecast, so nothing to worry about there. But at 9:45, we have that Chicago PMI that's coming out, so got to watch out for that right after the open. I still don't think that'll be too crazy, but you might see a little volatile move right off that print. So something to watch out for if you are day trading, S&P, QQQ, and all that.
I don't think the market cares about about this date
Yeah.
anymore. I just don't think it does because Nvidia, I think, was a perfect example of that yesterday because the report was fine. It just sold off, right? So just people looking for excuses to rotate into other names. They're looking for excuses to spread their money out into whatever it is. Again, always imagine that you're a hedge fund manager. And imagine you're a hedge fund manager and you're saying, okay, well, they come in, they go, okay, what are we doing? What are we trading? And you're like, yeah, well, I own like 20% of the fund in NVIDIA. Like I would go, I could do that by owning the S&P 500. Like what am I paying you 2% management and 20% performance for, right? So the managers are always looking for the next sector and they're flowing into it, and that's what creates this rotation in the overall market.
Yeah, 100%. I want to get your thoughts on one name that has taken some heavy downside lately that I love, which is Tesla. But I want to put it kind of in a different perspective for like the people listening as well, because a lot of people that just look at it, they're like, oh my God, this name's just getting beat up, which it has been for sure. But when I bump it up and just look at a yearly chart and just besides all the bad news and everything going on, nothing's really changed with Tesla as a long-term company. And we're down
Cool.
30% on the year. So yeah, you can share your screen, Michael.
Yeah.
Feel free if you want to, and we can go through your heat map. I know people love your heat map, but yeah, just something I want to put on people's radar. You know what I mean? I'm not saying do anything with it, but at the end of the day, Tesla, nothing has really changed. We're down 30% on the year. That is opportunity, in my opinion, back under $300. Are you kind of agreeing with me there, or what do you think?
Same answer. I want to wait for it to start going back up again,
I
right? I'm,
get you.
I'm not
Yeah.
really a pullback guy, but and by going back up, I mean give me a couple days. One thing that's
Yeah.
interesting is the AV WAP from this low, but zooming out, as soon as we broke back under this high, this is potentially a little bit of a bull trap here. But I want to see it come into maybe these prior highs. This is the breakout point that was broken out here on not an earnings. Was this the election? Yeah, this was the election
Yeah.
right here. So when it broke out and ran on the election, it's now coming back to that zone. So if we dig in here for a couple days, get a couple green bars, a couple bottoming tails, some evidence that this area is going to respect, then yeah, I like it as a nice pullback. It's oversold on kind of every metric. But yeah, this heat map. So I did something a little different with the heat map here. So this is the week to date performance on again the entire market, basically the Russell 3000, and then just ignoring everything that's down because we know what's down, right? That's not interesting to us, right? Tech is down. If you own large cap tech, sorry, you're down. But there's a lot of green here, right? There's and a lot of deep green. It's only things that are 2 or 3% up that we're looking at, and things that are up for the week. And this is where I talk about why I love sell-off markets because my life gets really easy now. I'm going to go through all of these names today. I'm going to go through I'm going to export this somehow. I'm going to go through every single name that is here and just say, hey, here's all the stuff that didn't sell off when the market sold off this week. So now I can start to make a list. Now, some of this stuff makes perfect sense. If you take a look at like McDonald's and things like that, right? They're usually flight to safety names. They pay good dividends, all of that. Finance, again, like it's generally not a name that people go too deep into if they're worried about the economy. If you're worried about people losing their jobs and a recession coming and all the things that really cause market downturns, you don't see financials hang out near all-time highs and up on the week, right? Healthcare is kind of the same thing, right? Some of this stuff is flight to safety type names, but Merck and Pfizer and Gilead and all these, are not so much. So this just shows me that there is rotation under the hood. I'd also talk about electronic technology. This is generally defense, right? We're talking Lockheed Martin and Raytheon and a lot of these names here. So there's a lot of places to go hunting. You just, and this is something I do a lot and sometimes trigger people. You just got to go listen. There's more things out there than Nvidia and Meta and Apple and all of these. There's tons of different stocks out there. And if you make 10% on Nvidia or if you make 10% on Berkshire Hathaway, who cares?
Yeah.
The money's still green. I just think people get very addicted to certain sectors. They get into something and they think this is, I figured it out. I need to trade Nvidia for whatever reason. It's like the thing's already the largest company in the world and has gone up 500%. It's done. Find other things, and that's what I'm going to be spending my time looking for. So that's the big look in the overall heat map. I did want to just do, again, the SP 500, just again to show people that we can see this rotation. First of all, this is a weekly chart. So it's everyone calm down. This is the weekly chart. Like it's,
Everybody take a chill pill.
everybody relax. This in 2023, this was multiple weeks. Oh, I didn't mean to even hit that.
And I remember everybody was freaking out there too. And like when you look at that in hindsight, you're like, oh, that wasn't even bad. Right? But
Yeah.
in the moment, it's craziness, right? Everybody thinks, oh my God, we're crashing.
And then, yeah, March 2024, I don't know what the news was here, but that was a 6% drop. We had this, I think, was that yen carry thing where we just tapped down 10%, which is what the media calls correction for some reason. And then, yeah, we're 4% off all-time highs. So this is why I just go, everyone's got to relax a little bit, right? I think one of the culprits is there's some people out there who don't use log charts, and that should be banned. But yeah, we've had a wicked move, and now we're consolidating. And it's not even that deep of a consolidation. It's not that deep of a pullback. We're just chilling out. And then from the daily chart, we're getting into the lower end of the range. So this is where we bounced before. We came up to the high. Now we pulled back to the low. Are we going to hold? I don't know. But until I start seeing us making lower highs and trending below this lower line, I'm not too worried. Could it? Absolutely. Right. But this is why I talk about, as long as we're in this range, and we're in this range now for months, you have to be buying the dip, selling the rip, mean reversion. I think what's getting a lot of people frustrated and getting a lot of people bearish is probably a lot of people bought a bunch of stuff way at the high. They said, okay, we're finally breaking out. We're making new highs. Let me get long here. Generally not what you want to do, right? Again, buy support, sell resistance until you get a good resolution of this range and we start to trend above, or we start to trend below. Those are the two things that I'm interested in. As long as we're inside this range, I see everything that's going on as just complete noise that I want to kind of shut out. And I want to do things like I showed here, where I just want to look at what's holding. I want to look at what's going on and say, okay, financials, XLF. Again, it doesn't look to me like a bear market when your financial sector, your banks are at all-time highs. And then this just might be the boomer in me, but I was trading 2008. You don't get real financial crisis happens when banks are hurt. They don't happen when technology names are hurt. And you have XLF at all-time highs. And then XLV is your healthcare names, not quite at all-time highs, but holding this range very well. So there's a lot of names that look out there, look good, right? It's just you have to be more of a Warren Buffett guy breaking out to all-time highs and not a Kathy Wood person who is smashing to lows. I think that's kind of the theme there. It's just be someone who is understanding that when the market's selling off, people want to go to things that are safe and they don't want to go to things that are super dangerous.
Yeah, absolutely. If the chat has any tickers that they want to throw towards us, that they want us to look at, feel free.
Yeah.
We'll go through those. But yeah, I mean, market really just sideways going into the open here. So I'm excited for the day. We'll see if we get something going. I am more bullish, but at the same time, I want to preface that, I mean, I do understand that we've just made massive moves, right, to this to the bottom of this range. If we need to go sideways here, we absolutely can. I just, on a Friday, I would expect a little bit of a bounce back, but you never know, right? If I don't get my points of confluence, I'm not doing it. What's your worry?
My only worry is just and then I get your take on this, is that are people going to be really hungry to take home trades from the weekend, right? Are people really going to be excited to go through and buy through the weekend there? Oh, I see we have a link here. So I'll go to the link and I'll look at I'll look for tickers. But yeah, that's kind of my concern. My bet, if I were to make a bet, is absolutely nothing, right?
Yeah.
That's my bet, is that we're going to have this kind of complete sideways chop where maybe we're a little bit above the pre-market high, but I wouldn't be shocked. I drew out the post-market low and the pre-market high. I would not be surprised if we spend most of the day inside here. But I do think maybe a break at the pre-market high could be buyable. So I've got my futures account open. I might just
intraday trade. Yeah.
Just again, I'm someone who, as a boomer, what I love to do when I can do it is own. I owned NVIDIA for a lot of that ride up. I'd just love to own a bunch of names that are trending and trail up the stop as they go. that would be great, but that's just not what the market's giving us right now. So you have to be kind of quick on your feet. So even my boomerness is doing some futures day trading and some intraday stock trading from time to time, just because, if you see the opportunity. I got a good short in Nvidia yesterday as it went from green to red and then held that till the end of the day. And yeah, you got to take your shots where they come and spend most of the time just hanging out in cash, waiting for opportunities. But
Yeah. Yeah,
yeah,
we'll
someone's
see
asking
if
about China.
we'll see if my bull case works today, or it honestly might be a trade for something in the next week. I'm not gonna lie, but we'll see. Yeah,
Yeah, one
China,
of the
large
questions is
cap.
about China and the ADRs there. I think we're just digesting this high. Yeah, it's gapping down, but you got to remember China will always gap because all of the action, all of the news and economic reports and all of that happens over there when our markets are closed. So if you just look at this chart from a daily point of view, it's just gapping all over the place all of the time. So I think what's happening is this is just going to consolidate around this high, and it's quite often this is what makes a cup and handle style pattern. This is what I'm looking for. So right, you have a prior high, you have a pullback, you come back to that high, and you have people digesting. This is all caused. I'm demystifying technical analysis every chance I get. This is just people who bought up here, or people who are buying it, and it ends up being this little kind of self-fulfilling prophecy too, right? I own, just full disclosure, still a whole bunch of Chinese names, and the idea is that a lot of people will look at that prior high and say, okay, this might act as resistance, so let me sell some. And if a lot of people start to think like that, then it's, again, a self-fulfilling prophecy where there's a bunch of sell orders out there. But what we need to look for is when this pulls back, do we dig in and get a little bit of a higher low? If we can get a higher low in through here and then start to push up, then that to me is like the real sign. If we pull back just a little bit, somewhere in maybe the 33 or 32 area and then ripper, then to me that's, everybody who's shorting against that level, everybody who made the mistake of selling at that level, those people are having a hard time, and we can push from there. Then the other question before I'll move the screen so I can see it, but was about the Doge cuts. Not really going to be the guy for that, but I'll just say I'm a technician. But the numbers I've heard is that there's about 5 million people in America every month that change jobs, and they fired like a couple 100,000 people. So to me, it just seems like it's one of those things that's being talked about a whole bunch, but doesn't actually really mean anything. I could be wrong on that. I don't know, but that's just kind of the way I'm looking at it.
Yeah, we got let's see, we got some tickers from the chat. MDGL. Let's see.
MDGL.
Oh, pharmaceuticals.
I like anything pharmaceutical. I like the look of right here. So you always see the first thing I do, I zoom way out because I just want to know what are we up against, right? All right, this is not quite all-time highs, but it's getting close. We have a massive level just overhead. This is a crazy looking chart from $300 down to $5 and then back to $300. That's a pretty wild looking chart. So that's the biggest thing that I just note right away. It's a lot of action going on here, good and bad, right? The good part about chopping around all-time highs like this is you're probably going to get a lot of people interested because it's going to show up on a lot of scans. There's a lot of algorithms that are run to say buy things when they hit all-time highs. It's generally a great strategy in the long run. But just like we talked about with China, there might have to be some digestion. There's some people out there that have held this thing from $300 and probably held it all the way to $5, and now they're finally seeing their account back green since the first time in 10 years. So you might have a lot of people selling against this level, but if you can get through, if you can get a good clean push through that 350-ish and a hold, that's interesting. And then zooming in just on the candles, just a lot of chop action, and this is kind of what you want to see when you hit an all-time high like that. When they blow right through, that to me is you kind of want to hunt for a pullback. In this case, when it's just digesting for long periods of time and it's just eating up that overhead supply, it looks good if it can hold. It's a
Yeah,
weird chart.
that consolidate. I know it's so weird. Jeez. And just where it came from is crazy. There's that market open. Kind of coming in into the open here. We'll see.
Yeah, the
We'll
first
see what the
move
market wants to do.
was definitely down there. I've got let me bring up the market here. I've got 10 orders to send. I always have, as part of my quantitative day trading. There we go, all done. I just got a bunch of orders that I spam out right off the open,
Yeah.
and in hopes that they get filled. Of those 10 orders, maybe one or two will get filled today. But yeah, we look at the SPY, then we'll just go to the open before we do too much or too many more requests. We're coming into the low end of the range. Question is, do we hold? I wouldn't be shocked to see at least them try to take some liquidity down there. I'm getting all the lingo that the new traders are saying, but when you see a big candle like this, it makes a lot of sense that down here you will see some amount of stop losses being placed below it. So it would kind of surprise me if we didn't get a little bit of push below that to see if there's some sort of action that they can load up on. But then the question is it one of those just undercut and rip, or is it one of those things where we spend some amount of time there? So that will be my watch kind of in the first 10, 15 minutes of the day. One of the only kind of trades that I make from just trying to take a shot here or there. It's one of the only trades that I make where I will just look to see that undercut and rally. It happens just so much where you get a strong level, they break below it, they spend a couple minutes below it, and then they rip the market up. So that's one thing that I'm watching there. But let's just take a look at some longer term charts. Someone's asking about Starbucks. Oh, that's up on the day.
It's been doing
First
good.
thing to note.
It's been quietly, like slowly up and to the right, but it's doing it for sure.
It's grinding. And again, this is, in my opinion, right, from all the studies I read, and I can show you some, there's a lot of them out there, on looking at how markets move and how markets work, is that relative strength seems to work. It seems to be a thing that works in the long run, in which you can buy the thing that is strongest, especially when the market is selling, and you can do pretty good trading those. So that to me just shows relative strength right here. Now, just like we talked about with some of these other charts, we have to get through that all-time highs. There's a lot of resistance that happened up here, a lot of kind of bag holding and things like that. When you're dealing with this kind of area, you have to say, okay, let's take a look. And if we can get through that all-time high, great. But yeah, it's one of those little overextended, a lot of resistance overhead. Not something that I'd buy here, but overall, zoomed out, the chart looks great. Ever since they fired that poor guy, that's got to be a real gut check.
I know, right? Ever since that happened, stocks just doing way better.
Yeah, how are you out there applying for new jobs when you're like, oh, what do you do? I was the CEO of Starbucks, and the second I left, they added $2 billion worth of market cap, and it's been straight up and to the left or the right ever since. So
yeah, it's a tough one. That is a tough one. What else we got?
Some seal. Is this even a thing?
I don't know.
SEALS.
I was looking at the same thing. I guess it is.
Thing? Seal skew. Okay, so that is the name, not the ticker. So that's the first good thing. Because I always say, if you got a Q at the end of your ticker,
I'm scared.
If you ever think that you've lost touch with the market, just go to Twitter and just type in BBBYQ. There are still people out there to this day, every day, conspiracy theories about how they're going to get rich off Bed Bath & Beyond. And the thing has been completely bankrupt for 2 years now. And it's so if you ever think that you're trading wrong, I always do that every now and then when I have a big red day, make myself feel better. This is an interesting play. I like the complete change of sentiment that happened right here. I talk about these a lot. These, when you IPO and you just tank, you generally don't want to be the first guy to try to catch in. That becomes a really hard game to try to get in there. However, you're not the first guy anymore. So you had a nice big bounce and a nice kind of push around there. So this, to me, just kind of looks like a bit of a bull flag. So you have to see, obviously, these patterns. This is what a lot of technicians get in trouble for. And me being a technician, I always talk about patterns, and then people go, "Oh, the pattern failed." It's like, yeah, well, a lot of them do. But so what you're trying to do is you're trying to say, okay, can this hold 285 or 275? If it can hold around this zone and then break this trend line to the upside, that's a nice low risk trade. That's the benefit of these kind of trades, I think, is that they are lower risk in nature, where you're not right, you're not too worried about, how am I trying to say this? You're wrong right away, right? So an old trader of mine used to call them basement window trades, where, if you're going to jump out the window, might as well be the basement window. So if you end up buying this thing as it breaks kind of 350 or somewhere in that range, and then you put your stop loss under that low, well, right, even if we get to all-time highs, that's like an 8 or 9 risk reward trade. Those are just kind of mathematically have to take. Like, you just mathematically have to take anything that's going to give you
The
9
risk to
times.
reward is too good. You have
Yeah.
to.
If
With
you just run the math and you say, well, if I'm only right a very small amount of the time, great, right? I can still make money. And that's how professional traders, they look at trading probability, where it's one of those, I don't know what's going to happen. I'm just going to play this whole probabilistic game, and if that makes sense. Now, as I look over at my other screen, I did want to point out that we're getting that exact thing that I talked about. So it'll be really interesting to see if we then get to the highs, right? So this is, again, while I was yammering, that's probably why I stuttered so much. I bought some SSO. I didn't have my futures account open, so I just went my broker account that was open and bought SSO because it's an leverage index. But just again, I am not a professional day trader. I'm a awful day trader. I'll just say, like, all the caveats in the world. This is not like a way that you'll become rich, but I just found that one pattern that happens pretty frequently that I like to trade off of is just that fake out. You find a pre-market or post-market low. In this case, it was yesterday's low and the post-market low. You undercut that, right? Get a bunch of shorts sucked in, and then you just take the other side of it. So my limit order happened. I scalped out a little bit. Now I've got a couple hundred shares of SSO, and I'll just hold them until this low breaks or the entire day, and it's like a break even trade. And I take this trade like once or twice a week, and it ends up being pretty good. Way to keep me involved, right? So if we get a monster rip today, great. If we come back and break the lows, it'll be like a break even, or I'll make a couple bucks at it, right?
I think if we do get going to the upside today, Michael, a great spot just for SPY is 50% retracement of yesterday's range. I have that at
Yeah.
591.34. So I think, if we do get some bulls today, a rebalance to at least that 50% retracement is pretty high probable. So that's what I'd be looking for. I'm just doing the NQs.
Yeah, it's a pretty common one. But yeah, for those day traders out there, again, I'm not the guy. I am. That will be the only day trade I will make today. From a discretionary point of view, I've got systems out there that do that stuff. But just if you're looking for something, simple to do, you're not going to become a millionaire doing it and drive a Lambo and all that. But for me, it's one of those. It would, like we talked about on that last trade, the risk reward on those is just so great, because I know if we roll over here and we hit lows, I'm out. If it ends up going, then I'll make I'll make some beer money, right? So
Oh, yeah.
with my 200 shares of SSO, I'll have a good weekend, and that'll be about it. The CRMD I saw here, so another one. These charts are hard. Just you zoom out on one of these guys, you just have absolutely nothing. So I know nothing about these companies. Again, I'm not a fundamental analyst, but I just look at this and I think this is probably a company that's trying to explore some sort of new drug. There's no earnings tags down here, which is kind of interesting to me. Generally, you see those from TradingView. Let's look to see. Oh no, earnings. So losing money, but expected to start making money. So yeah, it is an early stage kind of biopharma type thing. We have highs of 48 and lows of 80 cents, and it just chops between those. So this is one of those that's going to be very, very news driven. The reason I point all this out is that I'm not one of those people that thinks technical analysis is this magic thing. It's where buyers and sellers are happening. It's where people have transacted in the past. There's no magic to it. But so the problem with technical analysis when it comes to names like this is simply just to say news will definitely trump when I'm looking at this and I just instantly see this is kind of an early stage biopharma that's probably researching a bunch of stuff. They probably have a pipeline of whatever that will trump whatever I'm about to say. So just understand where that is. However, nice little tightening pattern here, right? It's so we have a kind of flag and a flag, I guess you could look at it. So we had a big push up. This is a move from $3 all the way up to 13. So this is not to be underestimated as a massive push higher. And now we have this kind of double consolidation where we have this overall, probably better just to draw it out like this. We have this overall range like that. And then inside that, we have another range. And I think that makes these things pretty easy to play. And I think this is why, when it comes to looking at technical analysis, people love the bull flag and everything so much because it just makes life super easy. Where if you lose 750, this thing is definitely, in my opinion, you got to go. If you're above 14, you definitely probably want to be in. But inside this range, if you want to get cute, then you start looking at this kind of tightening pattern that's happening here. So maybe a buy through 11 gets you to that 14 and then starts to break out. But again, with one of these, you got to know the pipeline. You got to go through and you got to take a look, right? If they're doing an FDA announcement in a couple months, that could explain why things are getting tight and choppy here. I don't think you want to be front running that. I don't think that's the move there.
Yeah, I agree. I would definitely look for if we're going to go higher here personally, just because we've only, I mean, that first pullback range low we made, we've kind of only had one visit there. I would love to see maybe that 781 area one more time before going higher. Maybe find some more buyers there, but yeah, overall looking clean.
Couple
KTOS.
We're getting this from the producer. I wonder if this is the producer's holdings. He wants us to take a look at. Defense. I love defense right now. This looks like one of the weaker defense style names, but when I brought up this guy and I showed these are the ones that are up this week, we had defense going on there as well. I gotta laugh. No, it's coming from YouTube. Just wonder if he goes, hey, I hold these things and they're down, and do you want to?
EVXY too, which is just the VIX, guys, which obviously been catching a bid lately. So
okay, I've got a whole rant for that in a second, but I think this KTOS, this is interesting where you've got this giant cup going on from 2006 till today, so you're talking nearly 20 years on this. It's got to stick the landing through 34. I think this becomes an easy. I like this chart. I'm actually taking a screenshot of this now, so I have it on my desktop. I don't forget it. I really like this chart because I like the defense sector. I just think you got to stick the landing through these prior highs. There's a lot of price memory here, so there's a lot of people that might be trapped. If you can get through that, then maybe you start to grind towards high. I don't think 1600 is probably in the cards, but a nice looking chart. But technical analysis on the VIX, it triggers me to absolutely no end. It's like,
how are you gonna do TA on volatility? It's so weird.
It just gets me. So and this is not to like berate the user.
Never know.
So, but well, first of all, so the VIX is the increase in this, but the VIX will go up when the SPY goes down. Period. Right. So if you want to predict what's going to happen on the VIX, you just do your technical analysis on the SPY. Like some people trade the VIX and they're not even too sure what it is. And the VIX is simply the amount of put contracts being bought on the S&P 500. That's it. So it is a tradable instrument in the fact that you can go and trade it, but it is not being driven by buyers and sellers. That's why technical analysis doesn't make sense on it, because it is being driven by how many people are buying put options. So the price of it is just being derived, and market makers are just making sure that that price is in line. So when someone says, "What do you think of the VIX?" I just answer back, "Well, what do you think of the SPY?" Right? If the SPY is going to bounce here today, then the VIX is going to go lower. If the SPY sells off, then the VIX is going to go higher. And not only sell off, this is the real problem with the VIX, but you have to have sell off and then you have to have dramatic sell off. Both of those things have to happen, because quite often you see the slow grind lower and then the VIX just doesn't do anything because it's just normal price action. Yesterday, you saw a little bit of a VIX spike, but still, again, still nothing crazy. So again, it is it just triggers me a little bit. So I just did a little bit of a rant there, just because it's, hey, nothing wrong with trading it, but just look at the SPY if you're going to trade it, because if the SPY goes lower, then you're going to be right and you buy the VIX. If the SPY goes higher, then the VIX is going to go down. So it's just a derivative of, it's like some people that chart options contract prices. That gets me too, because it's the same thing. It's just a derivative of something else. So why not just chart the thing that price is derived from? So rant off.
Love it. I love it.
I,
We got to check out Iova for Keith. Uh-oh.
ooh, well, sorry. Put it to start with that. That sucks.
Wait.
You want a beer?
Oh my gosh. I looked at the daily chart. I was like, wait, did this come out today? I'm like, no, I was just so zoomed in and it gapped down so much that I thought today was the only day. Oh shit.
Oh, so you gotta have the out, man. You gotta have an exit plan. That's one thing I love moving averages for. So right, I'm not a big
Yeah.
you buy this thing because this moving average is above this one. I'm not huge into that. I get it. It's it's a crutch to define price. But if I'm taking something like this, I'm slapping like a 50-day, right? It depends on your time frame. Short-term moving average, if it's a short-term hold, long-term moving average, if it's a long-term hold, and you slap a moving average and you say, okay, if we close below this, time to go. And then if it gets back above, you can buy it back in. That's the beauty of us, right? You can always get it back. So that would have been, again, somewhere around here. But those are the three that I went through. So I did that quick. So I'll do it again. So if it's like a midterm trade, if it's something I'm holding for a week or two, the 21-day EMA is something that a lot of people use. You say, hey, if it closes below the 21 EMA, you probably want to go. And then if it's like a hyper scalp, like something that I want to be in for 2 or 3 days and get out, a lot of people use like the 8 or the 9 or the 10 EMA, and that will drive price pretty close. And it's just one thing that I like about it. There's no magic to a moving average, but it just, for things like that, for trailing stops, I think it's great. And then also you can use, and trading view, there's a lot of ATR stop loss finder. And this chart's a bit ugly, so I'll explain it. But what this is essentially just taking whatever the current price is, and let's just use the lower one just to make it easier for people to see. And all you're doing is you're saying, okay, it's this candle plus or minus a couple ATRs, which is how much the stock normally moves. And then what you end up doing is you find an ATR that makes sense to you. So your stop would start here, and then you would raise it, but you'd never lower it again. So the line goes down, but that's just because the simplicity of the calculation. And then you just keep raising it until one time that price would cross your ATR, which probably would have happened on this candle right here, this one. And then you move out from there. So you gotta have your out. Even if it's a fundamental trade, because again, you can always get back in. There's nothing wrong with that. I think people have a fear of getting out just because it gaps back up in their favor, but that's a good look. But sorry.
I think too, like just coming from someone like where it affects me is like you get attached to a good average as well.
Yeah.
So a lot of the time it feels like if I'm gonna just come back later and buy this, I just want to hold it because my average is so good. You know what I mean? And there's that you kind of got to fight with as well. But it's always
at the end of the day,
shaving off some profits, man, and taking it.
And it's just numbers at the end of the day, right?
Yep. It's just numbers.
If you bought it at 1 and you sold it at 10, then you bought it back at 10 and sold it at 12. That's the exact same mathematically as buying it as 1 and holding it, right?
Yep.
Less taxes and things like that. But it's the same kind of thing. So someone talking about SoFi. Was it SoFi? No, it was Snow I was thinking about. Yeah, so SoFi.
Doing good this morning. I don't know how the higher time frame charts look. Let me see.
So again, I don't know a lot about the companies, but this is like a newer financial, right? This is like a millennial or a Gen Z finance company, isn't it? Like a new age bank.
Yeah, pretty much.
So
I would agree with that.
We talked about this, right? The banking sector. These sectors are kind of sometimes arbitrary split. Like you notice PayPal's not in the banking sector for some reason. It's in technology. That makes no sense to me. But sometimes you look at this and when you say, okay, if finance is going up, that means people perceive that the underlying conditions of financial companies it's going to make it easier for them to move. then you'd put this in that kind of bucket. So this, again, I love charts like this because I never want to be the guy buying down here. Yes, it'd be fun to be, but you're not going to do it all the time. You're not going to do it successfully over and over again where you're the guy buying at these lows. However, once it breaks out, it starts to get closer to that all-time high, because this is kind of a more recent type company. That becomes interesting. So another thing that I really like from these IPOs, you just pop a VWAP on the IPO. This shows you the average price of everybody who's been trading this particular name, this particular stock forever. As soon as we got through that at like 8, 10, or 9, $10, you had a massive pop. So I'd say that to me is my absolute. If we don't hold this, the game's over. It's time to go. But it's just a nice looking base at highs. So if you want to take a shot at the support, I think that makes perfect sense. For me, I'm more of a, show me that it's going to bounce off that level. Then what, you got 1850 at the highs. So if you can get up there, then that becomes interesting as well. But yeah, a nice looking chart, right? Again, just there's probably a lot of people trapped up here, and you got to deal with those people, right? It has to churn through that overhead supply. But as soon as you get through that, looks fine. Looks great to me.
Yeah, 100%.
RTX. Full disclosure, I may own RTX. I don't have that broker account open, but I had a stop limit this morning. So yes, I most likely, assuming that stop limit went off correctly, I own this guy. So just always full disclosure. And the reason I own it is because look at the candle yesterday and compare that to what happened in the overall market. This is what I was talking about when it came to defense. It came to all these type of names. So that's why I chose this particular name, because it's breaking out to new all-time highs. And when the market's been selling, RTX has been doing just fine. So I love all-time highs. There's a lot of studies behind buying things at all-time highs that ends up working well. It makes sense because everybody who is short this is wrong. Everybody who is long it is right. Unless you bought right there. So I want to see it obviously stick this breakout. That's why I have this kind of purple shaded area. This is what I look at as that breakout level. I want to see it stick that level. I really like the weekly chart, right, where it came up to that level, spent 2 or 3 weeks rejecting that, sold down a little bit, and now it looks higher. So this is a good name. It's going to be defensive in nature. So if we are going to get more market volatility, it's one of those that the defense contractors always seem to get their money anyway. So have at it. So that looks like a good one to me. And then KO, Coca-Cola. This one is just hilarious to me. That I think it was when RFK got confirmed somewhere in here, and everyone's like, yeah, this is the death of junk food and all of that. Hershey's is up big, Coca-Cola is up big, Pepsi's up big, McDonald's is up big, just to show you to turn off the narrative, just focus on what you're seeing when it comes to price action. But yeah, Coca-Cola at all-time highs. Nothing wrong with that.
Love to see it. I feel like I haven't. That's not like a normal thing. You know what I mean? It's usually it's Coca-Cola hasn't done anything once again. So
yeah,
love to see it, man.
Hit all-time highs, dipped. Now it's coming back through. This is a good one for us old folk out here that kind of like getting a little dividend every now and then. Well, if we're holding something for the long run. So I say, as long as you're, above the 60s on this, you just got to know that it's not going to double. Right? You're not going to be sitting there one day and there's some epic news release and they've invented Coke 2.0 and the thing is ripped. You got to know what you're getting into, which is a really slow mover. Something that if the market is going to get, just like I said with RTX, if the market's going to get a little bit shaky, if it's going to get a little bit scary out there, then Coca-Cola is still going to do fine, and you're going to get paid a couple bucks. Nothing huge. You're going to get paid a couple bucks while you wait, right? So, well, and then so the next question is BRK.B, and there's going to be some correlation there, just because he owns a whack ton of it. I think this is like the one stock he's never sold any of has been Coca-Cola. He's just been owning it the whole time and making that. BRK.B is, the question is, would I buy it here? Probably not, just because it's just broken out. But what I think you do is you look at BRK.B, the same as ARK. I don't think I'll ever buy ARK, but what happens is you look at ARK and you say, okay, what are the components? So if the largest wealth destroyer of all time starts making money for some of its clients, then I'll look at the components of it and see which ones are outperforming. I think that you do the same thing with Uncle Warren, where you look at him, you say, okay, where are these gains coming from? Right? We know he owns because he has to publish, so he publishes the ownership of what's in here, and you can take a look. You know, there's probably Coca-Cola is probably contributing to some of this move. He owns a lot of financials that's contributing to some of this move as well. He still has like 300 billion in cash that he can put into things. The problem I have, without getting super morbid, about owning Berkshire Hathaway is there's gonna come a day at some point where this thing's gonna gap down like 10%. I think, right, when he finally joins his buddy Charlie, and that kind of worries him to me. So what I would do is just Google, right, Berkshire B Holdings. I don't know at what rate he has to report them, but I think it's because it's exchange traded. It might have to be daily, but we can all kind of guess the stuff that he's buying, right? It's never going to be Nvidia, right? It's never going to be new age crazy tech or anything like that. It's going to be slower moving things. He doesn't make a lot of moves. I think the biggest move he took was when he had a bunch of airlines and then COVID hit and he sold the airline so that they could get government funding. I think that's a big move that he does, but I don't think there's a lot of, I think you look at the components. Same as when I talked about, right, I really like, was it ITA, which was defense. That looks great to me as a sector, but then I chose RTX because it is the strongest within that sector. So the same thing, I would look at everything that's reported for Berkshire Hathaway's holdings. I would grab the ones that make the most sense to me and my portfolio and the time. Like, I'm not going to be buying Coca-Cola. There's a lot of gray in my beard. There's not that much gray yet. I'm looking for a little bit of movement still. But if you look at it and that's something that's interesting to you, then you take that trade. I think that's a good one to do. Oh, and someone
100%.
liked my rant about the VIX, so
Oh
anytime
yeah,
I can rant, that's
we
great.
love a good Michael Nauss rant. Those are always good.
Let's do
Well,
one
there's the
more quick,
spy.
quick look at the market
We're not
until
doing
we,
much right now. The consolidation is just taking over at the moment. We got that little
yeah,
sweep and bounce, but kind of quiet. I haven't made any moves yet, but still feeling very bullish for the day at least. We're very quiet at the same time after those big moves this whole week.
yeah. So that's the only day trade that, again, I haven't looked at my systems that trade on their own, but the only kind of discretionary day trade I took, and the idea again was just you got a lot of support happening right here, break a support, you buy it back up through as it. So my fill is, I'm up a couple bucks on the share still. Sold a little bit into the spike just to pay myself, and now I'm just holding a couple hundred shares. I did the SSO for those who don't know, just because it's a 2x leverage. It's a cheaper price, still fairly liquid. There's some, it's not super liquid. I think SPXL is probably more liquid. SSO, I just like it because it's cheap and it's leverage, so it just takes up less buying power. If you're trading futures or something, again, I have a futures like prop account. It just wasn't open before the stream, so that's how. If I'm trading these ETFs, I'll be out of this by the end of the day anyway. Maybe if we had some crazy move, and we're up, we're well above like this consolidation that happened yesterday, then maybe I'll hold a little bit into the weekend. But this is a big thing with those leverage things. I think a lot of people get in trouble holding these names far too long, thinking they're way too good out there. But just wanted to leave you guys before we get going, just with the SPY and saying that undercut, as long as that holds. So as long as 583 on the SPY holds, I'm with Jordan here, where I think it could be a little bit of a bullish range. We need to get this pre-market high broken. That's the high from that economic event that came out. So if that breaks, then yeah, we could have a nice little bounce today.
Yeah. We will see. I'm excited for it. I'm excited for into next week too, because if we do get a nice bounce today, or even if we just chop sideways and hold the levels I want, it could be a nice. If we're gonna keep ranging like we have, it could be a beautiful bullish week next week. That's kind of what I'm expecting. So obviously, we'll see how Monday goes. We'll see how Tuesday goes into next week, and if the price action actually supports that. But it's definitely what I'll be looking for if we get a decent close today. So. Appreciate the whole audience, Michael. Always appreciate you and the charts. You're awesome and you're great at this. So appreciate you coming on the show, and
I always have
teaching the
fun.
crew. Yeah. Well, everybody, trade safe. Have a great day. Make sure you guys are liking and subscribing on the StockTwits platform. And yeah, we'll see you guys next week. Enjoy the weekend.